Okay, so hi everyone. Thank you for joining us at LimKopi with Millennials. So we're gonna start shortly. Just wait a little while more. Okay, just wait a little while more. Yep. Hi everyone. Thanks for joining. We're gonna start in just a few minutes. Okay, just hang tight. Wait for a few more people coming in. Okay, so welcome. We're gonna start now. Welcome to LimKopi with Millennials. So we're gonna officially start now. Time now is 6:33 p.m. Okay, so let me introduce myself to this webinar. So I am Joseph, or you can call me CK. I'm from the digital team in Phillip Securities. So maybe joining us, right, is relationship manager Vince and Edneth. We're gonna give them some airtime, right, to introduce themselves. Okay, so maybe we start off with Edneth first.
Okay, Vince, you start off first.
Okay, Vince, you can go ahead. Yeah.
Hi, good evening, everyone. As you can see, we are the three musketeers today. Yeah. So hope you have a good time with us. Thanks for tuning in. I'm Vince. I work in the Raffles City branch, and I help clients to manage their wealth matters. Okay, over to you, Edneth.
Hi, my name is Edneth. I'm an RM with Bukit Batok branch. So I've been in the wealth financial industry since 2014.
Yeah, so they are both from the PIC side. So if you happen to stay around there, do drop by to PIC centers, Bukit Batok, Raffles City, you can always drop by. So with that, maybe let's start today's session, yeah? Okay, so today's session, right, LimKopi with Millennials, we are talking about a very sensitive topic. Always people are always talking about this, navigating through recession. And the real question is, we ask ourselves, like, are we actually in a recession, and what exactly is recession, right? So let's start off. So maybe Vince, actually, what is your concept of recession?
To me, recession, I'll define it as a general slowdown in the economic activity. And economic growth was slow, interest rates are high, and maybe from the top, the tip of the market to there's a 20% drop. I think that could signal the start of a recession in the economy. Yeah. So I think we're approaching there. perhaps.
Yeah,
So,
I think also like we can also agree, right? Sometimes when you go downstairs, you buy your usual cai you buy your usual dinner, lunch, and it's getting more and more expensive. You track your monthly expenses, and it's always like 30% or more, right? So
yeah.
it's a bit hard pain, but well, hopefully we can come out of it. So the definition of recession, right, actually by Investopedia, if everyone know. So during a recession, right, the economy, kind of struggles. And, during recession, people will lose work, unemployment rate will go up, somewhat the country's overall economic output will decline. So spending will also decrease. I believe everyone is aware of it, and especially everyone is doing right now. We are spending less, we are borrowing lesser also. So you can see mortgage rates, going higher than usual. Yeah. So this is a definition of recession, just to give a background for those who are new to this webinar. So, next question, right? You always ask yourself like, okay, so let's say now we are in a recession, right? How do we actually prepare for recession? Things like saving money, tracking your expenses, does it really help? So we did something very simple. What it is what we can do to tackle a high inflation period, and also a recession, more like a recession period, right? We need to track our expenses. We need to do the 50, 30, and 20 rule, especially for new investors who are young adults, just started working. You can allocate like 50% to your needs. You can allocate like 30% to your wants, and of course 20% to save and invest. Would you agree, Enough? Oh, actually, like, when you get your first paycheck, right? Do you actually split them up?
Yes, definitely. First CPF take away 10%.
Yeah.
Then remaining 80%, right? Of course, we will form 100%. So usually I will split depending on the commitment that you have. So let's say I'm single, I don't have commitment. So actually I can save about 50% of what I bring in. I set aside for rainy days. Then I put in the safe banking account. So let's say bank account, what do you mean? Right? When you put in banking account, could be, let's say using OCBC, we can have a 360 account. If you are using the DBS, you can have the multiplier account. So all these accounts, right, when you say you put your hard-earned money, right, they also generate a form of higher interest.
So essentially is find the highest savings account, they give you the best rates, right?
Yes. Yes. Then remaining 50%, I'll use it to party,
Yeah.
have shopping, spending.
Yeah.
So still comfortable lah. But for, let's say for new, let's say you still just started out, maybe you just started out, you have no idea what to do, right? The 50, 30, 20 rule, right, could be something that you can work with to have a feel of it lah. Then from there, right, you just adjust accordingly, which to fit your lifestyle, because everyone is different.
Yeah, I think also like for us, right, because Edneth and I, we are both single, so it's more flexible, right? For those like with family, like Vince, with kids, I think spending kind of takes up a lot, right? Especially eating out, right, Vince?
Yeah. So eating out, you're paying for your kid, your family, right? And also, like, if your wife is pregnant, you got to bring her to the gynae for visits, for ultrasound scans, for supplements. So every visit is around $200-300 for the scan. Yeah, and also sometimes you do the prenatal test, can go up to a few $1,000s. So you need to park aside some savings, especially if you are starting up with a family. You're gonna dip into this emergency funds for all these purposes now.
Yeah, I think it's important also to set aside some emergency cash, especially, right? At least people always say like 6 months of your either income or expenses, depending on your needs, right? So moving forward. So talk about skills future, right? Or we talk about upskilling ourselves, and this is what the advertisements always say, you know, especially to this athletes, right, in the TV commercial, they always come up with some drama, you know, always encourage folks to upgrade their skills. You know, I think in this highly competitive workforce, right, especially for us young adults, right, and of course our working adults, right, older generation working adults, right, we are always, there's a lot of people and always competing for the same job. And I think it's best that we can upskill. Yeah, so this is just one pointer as well. So another interesting pointer, right, this one, right, okay, so sometimes do you realize that young adults, we like to go for like spin classes, we like to go for these recreational activities like yoga classes, you know, dancing classes, piano and art classes. Yeah, so actually maybe Edneth, I ask you, do you think that do you actually spend on all these recreational activities like spin classes or yoga classes?
Personally, do not go for all the activity. For my kind
Yeah.
of activity, I save. If you look at it this way, instead of going for spin classes,
Yeah,
I save to travel. Like
travel.
travel to, you know, now opening up maybe Taiwan, Japan. So to me, that one is my recreational activity already. So that's where how I find my fun. I spend my extra money on this. I'm not an exercise guy. I don't.
Yeah.
So all these yoga class, all these are not really my type.
I think Vince went for some spin classes, right? He was telling me.
Oh yeah. So my wife and her clique of friends, they are like regular riders at this spin studio lah. So I actually joined them for a few sessions lah. So you might think it's easy just riding like that, but actually the intensity is huge. Yeah, it's I can't keep up. Yeah, honestly.
Yeah. To give a bit of background, right, context, right? When you go to these spin classes, as you can see in the image, so basically there's this one instructor in front of you, and all the participants, right, we need to mimic her motion, her movement, right? So she will what the instructor will do, she will, you know, he or she will bend down, you know, and stuff like that. And will dance to a music, and usually the beat is really upbeat, right? So it becomes very intense overall. And then sometimes they will do some lighting, right? Not wrong, Vince.
Yeah. As they play very, you know, the music, loud music. And it's like a clubbing experience. Clubbing, cycling, And sometimes it's very easy to lose, to just lose yourself, you know, and push yourself too much.
I think it's a quite fun experience. I haven't really been to it, but I saw it before. And then I was always thought to myself, like, why not I just cycle, you know? Why not I just cycle like in real life still? But then again, it's a different, whole new experience. Yeah.
So I think there's 12 sessions. You can go and try 1 or 2 sessions. It's very affordable. Try the experience. And you might never want to go back.
So I think sometimes we adults, right? Then we get we spend thousands sometimes on this kind of recreational activities like spin classes, yoga classes, especially you can see us. Also, we spend on our kids a lot on dancing, piano, art classes, and all this is to, you know, for the parents, right? Their main motivation is to cultivate learning, right? I think at this environment, if they can afford it, then go ahead. But let's say in a recession kind of period, right? Do you suggest, or maybe Edneth or Vince, right? Do you guys suggest like cutting back a bit on these activities?
Usually when recession comes, right, families when they look at their budget first, will cut off all the so-called wants to tighten their belt. So first thing goes, right, is like all these record activities like art classes, maybe taekwondo classes, spin class, all will be off the shelf first already
Agreed.
Especially let's say you see the breadwinner suddenly, you know, maybe the father lost a job and so on. So usually all these wants usually will be off the so-called, they take off first. Usually family will start to prioritize those needs already. That's where they start to see which one is more important. They zoom in.
I think most of the time is they try to cut back on expensive recreational classes and maybe go for something more affordable or go for something more fun, right? Like cycling, it's more fun, I think. Yeah.
Cycling outside is free lah. So maybe
they
adapt lah, improve, adapt, overcome. Maybe instead of they cycle outside in the nature.
I think
jogging is free.
adapt law. Need to adapt law. Yeah. Okay. Moving forward. So a very interesting article, right, recently say that a Tampines HDB flat, right, sold for $1 million. So it's the estate's first $1 million resale flat. What do you guys think about it?
I think it's every Singaporean dream to own a piece of your own property, right? Like it's the Singaporean dream, lah. Yeah.
I think also like for us young adults, right? Because Vince, I believe, is married. I think he's waiting for his house. Yeah. So for myself and Edneth, right, we are so-called the young adults that haven't married yet, haven't really get a house yet. So at this point of time, right, since the house is so, I don't know whether it's called overvalued or expensive. It caught me thinking like, wow, it's so expensive. How are we gonna afford it, in the future? The price is just going to go up and up, the kind of settlement lah. Yeah, that's what I thought.
I think in good times, right, property will rise lah. Maybe that will be a bad time for you because in good times, property you see that going higher and higher. Yeah, but if let's say recession were to come, right, and also especially with the high interest rate coming in, right, you'll start to see maybe people, if let's say those maybe those couple that do not maybe plan the financial properly, and the high interest rate, let's say 3 to 4% is hurting in their that means they hurt into their finances, and maybe one of them lost their job, unable to finance. That's where you see that some fire sales property to go in. So in my opinion, recession time, right, if let's say it could be another opportunity to buy a property, especially let's say you're a young family, you're looking to start a family, you want to do some shopping. Then when recession come, right, probably it's also a good time for you, to shop around for people that maybe want to let go at fire sale price. But likewise for some of my friends that are holding condo, right, they are not willing to sell at a loss, right? Then they will every day will complain about very chuan, now interest rate, no more fixed rate, all going floating already. Then going near to 3 to 4%. Then their monthly commitment, right? Right now their OA cannot support. They have to top up by cash. Then they're feeling the pinch already. Yeah, so that's also what some of them maybe start to use their saving, maybe try to reduce the loan and so on. So yeah, so actually there's no right and no wrong time to purchase property, I think, but I only see the circumstances. But generally, if you ask me, I feel like recession may be a good time to go in property. That's where you may find very good deals.
But of course, this is just it's not financial advice. This whole webinar is not financial advice. Yes. So so moving forward, right, actually, I saw this rule, right, it's pretty interesting, like how to use this 3-3-5 rule, right, to consider if you can afford your new home. So I think a lot of young adults like us, right, we try to overstretch ourselves. We always try to say, okay, I can afford it, I can afford condo, I should go for condo, that kind of mentality, because in the future I can sell for a higher value. But there's a framework, right, that says that if you follow this 3-3-5 rule, right, you can actually not overstretch your budget. You don't limit yourself. You don't overstretch yourself. You also don't stress yourself, especially, right? I think when a lot of Singaporeans, right, when we work, right, our first paycheck, for example, the paycheck, right, I think at least 50-60% is like go to mortgage, go to your mortgage really. Yeah, I think that's kind of stresses out some families. So go through some 3-3-5 rule. So how it works, right, is that to see whether you can afford your new home, you can actually see the 30% of the property price. Your initial capital, right, should be at least 30%. So you must have that amount of cash, okay? And then 1/3 of your monthly income. Your monthly payment, right, mortgage payment, right, should not exceed at least 1/3. And if you exceed, right, more likely, to put it another way, you cannot avoid it lah. Yeah. So also your house value, right, should be at least 5 times your annual income. So that overall you can pay in full, you can pay in time, at the same time you can pay without stress, right? I think that's the most important thing.
Yeah. CK, just to clarify, this one is for one person or joint ownership?
Oh, this one is for...
Should be for single person, right? Single income?
I believe it's for the houses. I think it's for the house owners.
Right.
So a couple, lor. So a wife and
Couple
husband, right? Yeah, I believe it's a couple, wife and husband. Yeah, the audience as well can take a look at this. I think it's a pretty interesting,
very useful.
framework lah. Those who are
Keep
thinking to
within the
buy
means,
property. Especially for Edneth and I lah, of course. Yeah.
I'm waiting for 35 years old to ballot.
Yeah. Yeah.
No one to ballot with me. So I need to wait until 35.
Okay, so but aside from cutting back spending, aside from cutting back or spending on these recreational classes, aside from delaying our gratification, right? Like don't spend so much, right? We also need to invest. We need to come up with ways, right, to preserve our wealth, right? So some of the ways, right, to preserve our wealth and build our wealth, right? Maybe Vince can go through this part. In this kind of recession period, right, what is more suggested, when you want to build your wealth or more safe?
Right. So I think SmartPak is a good facility that Phillip account holders can opt into. So right now it's floating. So right now for Sing dollars is doing around based on the last 7 days returns annualized lah. So it's doing around 1.64%. And the good thing about SmartPak is that you can withdraw anytime. So it's liquid. You can withdraw from your account anytime. While if not, you can just leave it in the Phillip's account to generate some returns for you while you wait for opportunity to go into stocks, shares, or ETF. So compared to a fixed D, you'll be locked in for 1 year, right? Or if you bought into some short-term endowment plans, you'll be locked for 3 years. It's liquid and you can withdraw anytime. That's why some of my clients have parked some money in the MMF. So it could be a good option, of the many ways.
I think mostly it's the best time, right? The best thing about it is liquid, right? You can withdraw it anytime. Okay, there's no penalty to say, or there's no fees, right? So what there's there's no lock-in, especially there's no lock-in facility. You put in your money, they buy in this money market fund, right? Which is low risk, but at least it gives you an interest. It gives you a returns.
And this is also available for US dollars class. So you put US dollar in the account, you opt in the facility, you can have enjoy it for your USD as well.
So I think in a way, as somehow Vince is while waiting for market opportunity to enter, your spare cash, right, actually can maybe temporarily park into SmartPak. So while waiting, you still get interest along the way.
Yeah, some returns, some returns. Yeah. So just to quickly glance through, right, some of the products, right, or this is not financial advice, but some of the products that is recommended or to fight recession, right? Or maybe Edneth or Vince can go through this one.
Sure. Okay. So we like to share that this is not financial advice again. Once again, we're not making a recommendation. So there's Singapore Treasury bills. So these instruments have typically 6 months or 1 year tenor. So I think the last month batch did around 3.32%. And if you want to continue the rest.
Oh no, I was just saying the T-bills is quite hot. Recent tranche. Almost all my phone every day, right, is all my clients talking about T-bills.
Yes.
Especially the one which they predict is offer about 3.2%. And it's almost guaranteed and backed by Singapore government. So every day, right, my message a lot of clients asking like, hey, how to subscribe this one? Phillip got offer or not? How does it work? how to subscribe. Then the question repeat.
Yeah. Hey, Vince, have you heard of T-bills? You know how to subscribe? Yeah.
Yeah. So this is also education part for the audience, those who don't know what is T-bills. Yeah. Then on the short-term endowment plans, actually, what is that?
So this instruments is like insurance policies, but it's like an endowment plan. So typically they have a term of around 3 years, and there'll be a rate fix, which is fixed for these 3 years. So the latest one we had was 3.1% per annum for 3 years. But typically you need to lock through 3 years. So you need to lock your original capital with the insurance company for 3 years, and then you get your maturity at the end of 3 years. So if you're okay to lock for 3 years, you can go for these tough plans in your portfolio.
Then how about income and balance funds? Just a brief run through.
Okay, so for income and balance fund, they belong to investments. So investments are always non-guaranteed and subjected to volatility in the market. Especially this year, S&P, I think is now 20% year to date. And we expect more volatility to come. Especially with the one more meeting at the end of the year. So income funds will give out regular income to help you to defray some of the losses to your portfolio. Balance fund are like balance fund into 50% into equities, 50% into bonds. So the bonds in the balance fund help to cushion the volatility in the portfolio for you. Yeah, as compared to a full equity fund. Yeah. So these are some instruments. You can consider.
Yeah, just to add a bit more. Let's say you are looking at this environment, you don't want to invest in stock, you want to look into various income, you want to have some money income, right? It'll be good to speak to your financial advisor so that they have a clear look at your current portfolio. Then they design something, right, that is actually suited to your risk profile and also your budget.
Yeah, I think that's the most important advice to always seek out your financial advisor to help you along. So different people got different situation. Yeah.
Correct. Everybody is different. They have a different risk profile, investment horizon. So always speak to your financial advisor before making a decision. That'd be good.
And also, like, for example, let's say if you still want to invest in stocks in the long term, right? We're talking about long term now, like for example 5 years, 10 years, or so on, right? And you don't really want to monitor the stocks, right? You want to focus on your life, doing the things that you want or love, right? You can actually put in like maybe robo accounts, right? How it works, right, is like they will actually when you put in your money in, right, into this robo advisory account, right, they will use the algorithm, and the portfolio manager will also invest for you based on the data provided by the investment team. So all this algorithm, right, is built by the data scientists. We have a team at the back doing the portfolio managing for you, and it's quite simple and very straightforward. You put your money in, the algorithm and investment managers invest for you in the long term, of course. Yeah, of course, then you can also take some time to go through this, and I will take some time to share the Smart Portfolio sign up link, which is over here. Yep. So let's say if you don't have an account, you can always apply for a Smart Portfolio account online. It's pretty straightforward process. You can sign up using MyInfo SingPass. You can invest your cash or SRS. Yep. So lastly, also let's say if you are not really sure, right, overall throughout this session, let's say you are not, not really sure which product to go, or at least not really sure which direction to go, right? You can always assess your financial status with FinanceFit. Okay, so what is FinanceFit? FinanceFit, it's like a financial tool, right? They ask you series of questions, so they will help you to evaluate your financial status towards your goal. So for example, let's say you have a goal of having a property by 35, or maybe let's say you have a goal to get married, or maybe buy a car, and so on. And along the way, right, let's say at the end of the report, right, at the end of the questionnaire, the report will generate out to you, You know, you can see how much you're short for, and also a financial advisor reach out to you. So of course, do check it out, FinanceFit. It's a pretty intuitive FinanceFit tool. So let me just share the link here. Yeah. Okay, so along the way, right, we're approaching to the end of this webinar. If there's any question, do include them in the Q&A. We're going to answer them right now. Okay. Okay. Don't mind Vince and Edneth can help me pick up some questions.
Sure. So, okay, there's one question by Jonathan.
Okay.
So, I've investments in unit trusts and other financial products which have been doing poorly for a while. Should I hang on or look to change this? How long should I leave before changing?
Okay, fellow RMs, please answer.
Right. Okay, so okay, maybe for Jordan, I think we really have to see what is inside your investment portfolio, what you're holding. You know, what is it? US equities, Asian equities, high yield bonds, short-term bond funds. Really have to see what's inside your portfolio before we can advise you better. Yeah.
Yeah, I think to add on with Vince, right, because different market is facing different situation right now. China have their own issue, US have their own issue, even Euro, you see, is the currency of their own issue. So when you say pulling poorly a bit, don't have enough context for us to go on. So maybe, right, maybe you have to take it offline. You can approach Vince or me so that we can take a look into what are the products that you feel you want maybe extra opinion on it, and maybe give a feedback. So it will be better advice once we take a look in your portfolio. We can actually give some comments, or you know, how is the portfolio going, or what's the long term or short term outlook for it. Yeah.
Okay.
I believe the person asking is probably like a young adult like myself, maybe a working adult as well. Yeah, it's I think, yeah. So sorry, Vince, you were saying another question, right?
Just to add to the last point, so it's good to sometimes engage an advisor to bounce off each other to find out what's the best investment strategy for your own investment profile. Yeah. Okay. Okay. Second question is: are there any short-term options with capital guarantee to lock in CPF SA for shielding purposes? Capital guarantee. Yeah.
I think capital. Sorry. I need enough. Yeah.
When you say first, CKS, you
no, you say first, please.
Yeah.
I think for shielding purposes, I think the audience have read up from the Street Times, I believe, and has been a very hot topic for shielding purpose. But I think recently on the CPF website, right, is they don't encourage shielding because what, like with the given the example, to give some context, because shielding, right, when you put in, right, for various instruments, you may suffer a loss to your capital. So of course, nothing is truly capital guaranteed. Let's say you're using your money for investment. So that itself is quite hard to actually, I think at this moment, I can't think of anything to recommend, unless Vince got something to say they're really capital guaranteed just for shielding purpose. Because generally when we want to talk about investment, right, we want to look at the short-term goals or long-term goal. But shielding purpose is like, so-called based on the Street Time article, you're trying to game the CPF system, which CPF website itself that they don't encourage, because you may suffer a loss to your capital.
Yeah, there's potential volatility with the options that you're utilizing for this. Yeah, it's more tactical. Yeah, so I don't think so far, in my opinion, there is an option with capital guarantee. Yeah, for this. Yeah.
But let's say you want some ideas to bounce off or what tactical to put in, right? Maybe you can approach Vince or me myself, see what are the various options, If you want to invest, do some investment for your CPF SA.
Yep. Okay. So okay, unfortunately time is short. I need to cut you guys right here. Okay, so currently right now we answered 2 questions. Hopefully, this LimKopi webinar reach out to you, and hopefully those people who ask a question right will get your answer. So now currently right now we're gonna end the session. So once again, thank you guys for joining LimKopi with Millennials. Do look out every month at the end of the month, right? We will have a LimKopi webinar. So once again, we thanks Edneth and Vince for joining us. Do look out for them, and that's about it. See you guys in the next monthly webinar.
Thank you.
Right,
Thank
thank
you.
you. Bye bye.
Three Musketeers signing off.
Yeah, bye bye.
Bye.